Trading mistakes and Fibonacci extensions. Trading mistakes and Fibonacci extension. If you have been day trading, swing trading a position in the financial market, and you are not making any money, or you have been losing, it means that you have been making a lot of trading mistakes. And sometimes traders do not even know the trading mistakes that they are making. In most cases, when a trader loses money, he or she may become a little bit emotional, which is normal. But at the end of the emotional reaction, it is essential that a trader review the trade to identify the trading mistake that has occurred. In this tutorial, I want to talk about trading mistake and Fibonacci extension. This tutorial will help traders that want to avoid trading mistake and also to improve their Fibonacci extension trading. I recommend to traders to watch the full length of this tutorial so they may start improving their Fibonacci extension. Let's get started. We are on a monthly chart of Urban Outfitters Incorporation. This is an American stock, and the APX URBN, Uniform Romeo Bravo November. And we want to discuss trading mistakes and Fibonacci extension. Pay attention, all right? When we are talking about Fibonacci extensions, all right, it is almost impossible, all right, to master Fibonacci extension without the Elliott wave extension. Now, allow me to say this again. It is almost impossible, all right, to trade Fibonacci extension successfully without mastering, okay, the Elliott wave extension. You can quote me on that, all right? So, if you have been using Fibonacci extension for some time, but you like the knowledge of wave extension, go to www.24elliottwave.com, click on Elliott wave extension, and start learning about Elliott wave extension. You can also subscribe to 24 Elliott Waves YouTube channel, so you may start watching tutorials about Elliott wave extension. So to excite you a little bit about the subject of Elliott wave extension, though this tutorial is more about Fibonacci extension and how to improve Fibonacci extension with the wave, okay, extension, all right? So for somebody who understands Elliott wave, all right, I want you to start getting a little bit excited about the wave extension. So an Elliott wave trader, okay, who see that the first wave and the third Elliott wave are not extended, he or she will expect the fifth Elliott wave to be extended. So which gives that trader an edge in the financial market. So what usually takes place? Generally, the third Elliott wave is the wave that is usually extended, okay? But sometimes it is not. So when we see that the first wave and the third Elliott wave are not extended, and we see a pullback, okay, during the fourth Elliott wave, the Elliott wave trader will expect that, okay, the fifth Elliott wave will be extended. So 1, 2, 3, 4, neither the first or the third Elliott wave are extended. If, repeat, if the fundamentals are solid and the market environment is viable, the fifth wave will be extended. Repeat, if the fundamentals are solid, the market environment is viable, the fifth Elliott wave will be extended. This is just one principle of Elliott wave theory. So you can see that with that information, somebody who is using the Fibonacci extension, so as the price is, he or she understands the Elliott wave extension, now he notices that the fourth wave is now completed, and neither the first and the third wave are not extended. He or she will now apply Fibonacci extension to set the target, expecting the fifth wave to be extended. As I explained to you already, this tutorial is not about Elliott wave extension, but about the Fibonacci extension. Another thing that we can say to traders is that so the best time, so because I said to you that generally the third area wave is the wave that is extended. So the best time to apply the Fibonacci extension is usually at the end of the second area wave. So now you see now, so by knowing a little bit about the area wave extension, you can quickly improve, okay, your Fibonacci extension and also avoid the trading mistakes. So why I'm talking about trading mistake? Because it is completely mad that a trader is expecting an extension when the price is in a corrective wave. It is completely crazy for a Fibonacci trader to be applying Fibonacci extensions when the market pattern is a corrective pattern. So now what I'm trying to do here is to open your eye, to wake you up a bit, to encourage you to go a little bit one step ahead to start improving your Fibonacci extension trading. All right. So having said that about wave extension, as I told you, it is almost impossible to master Fibonacci extensions without the wave extensions. All right. This subject now I've finished that topic. Let's move on to the next topic. The next thing that we can do to improve, okay, Fibonacci extension trading and to avoid trading mistakes is to combine, my friend, repeat, combine, okay, Fibonacci extension trading with the market pattern. So traders that have been following us already know what I'm talking about. So they will say, oh, George, come on. Now allow me to speak to new traders, all right? We have a 3 market pattern, okay? And I talk about this all the time. In order to achieve consistent winning trade in a financial market, one should not violate, okay, the market pattern. There are 6 biggest trading mistakes that I talk about at dayprotraders.com. Click on biggest trading mistake. And you want to know those trading mistakes. So, but we want to talk about Fibonacci extension and trading mistakes. And using market pattern, there are 3 market patterns: the rising channel, the horizontal channel, and also the declining channel. The worst time to use Fibonacci extension, talking about market patterns, is during the correct consolidation phase. But let me clarify something to you. When we are talking about consolidation, generally most technical traders will think of horizontal channel. But there are different types of consolidation. A consolidation can take place in a triangle, all right, ascending triangle, declining, descending triangle, all right, expanding triangle. Those are also consolidation. But when we are talking about consolidation, everybody's thinking of horizontal channel. But for somebody who understands area wave, they know that when we are talking about consolidation, we are talking about correction, all right? So the worst time to use Fibonacci extension, or to the worst time, okay, to start using Fibonacci extension is during the corrective phase, during the consolidation time. So you may say, Joe, when is the best time to use a Fibonacci extension? The best time to use Fibonacci extension is during the trending phase. Area wave trader will talk about multi-wave. Ordinary trader will talk about trending phase. So you see now, so when the price is in a rising channel, all right, trending, truly trending, we can apply Fibonacci extension. If the price is also in a declining channel, yes, we can apply Fibonacci extension. Do you think that that is useful to you today, to know those things? But you will say, George, you have mentioned this in few videos already, but I have one more thing I want to tell you. And I want you to stay put and to watch the full length for this video and do not allow anybody to disturb you, because this is an essential tutorial for Fibonacci extension traders, okay? One more thing I want to say to you, okay? If, repeat, stay put, my friend, if a financial instrument goes up for a long time, so a price went up for a long time, maybe you have $50 price move, or you have $100 price move, or you have a $200 price move, all right? Price went up for too long, extended. There was an extension, that's what I meant. If there was an extension and we see a pullback, all right, we do not want to be too excited to apply Fibonacci extension. Why? Because the extension has already taken place, and there is a high chance that after the pullback, we may not see an extension again. So look at my drawing here. You can see that this is an extension. Probably went up for a long time. Now we see a pullback. Do not be too excited to apply Fibonacci extension, because in most cases, the price will stop at 138.2% Fibonacci extension level. All right. So if there is already an extension and a price pullback, do not be too excited to apply Fibonacci extension. So for traders who understand area wave extension, oh, am I talking about area wave extension again? Yes. They know that we have three impulsive waves: the first wave, the third wave, and the fifth wave. So either the first can be extended, most of the time the third will be extended, and sometimes the fifth will be extended. So if we notice that the first is extended, we know that, okay, the third may not be too extended, and the fifth will not be extended. So this is what I'm trying to clarify to you here in a layman language, that if you see an extension and then you see a pullback, do not be too excited to use your Fibonacci extension. But in most cases, if you see an extension and then we see a pullback, repeat, in most cases, the price will stop at 138.2% Fibonacci extension level. Say, George, show me one example. Are you blind, my friend? There's one here on this chart. You see here how the price was extended here? Let's put it here. From here to here, yes or no? Okay. Now the price pull back, okay? Pull back here. So we have an extension and then we see a pullback. Do not be excited to apply Fibonacci extension here, because in most cases, the price will find it very difficult to go above the 138.2%. Can you see 138.2% on my chart? Applying Fibonacci extension to this section here, that's the 138.2%. If an extension has already occurred, if the price has gone up for too long, or the price went down for too long, and then you see a pullback, do not be too excited to apply Fibonacci extension. Do you find that useful or helpful? Okay, put your comment in the comment section. I don't want the video to be too long. Let's move to the next thing that I want to say to you. The next thing I want to say to you is this: to avoid trading mistake and improve your Fibonacci extension trading. If a financial instrument, okay, goes up or goes down from A to B for a long time, so we talk about it, one example already here, and the price pull back too far, so we have a deep retracement, do not be too excited to apply Fibonacci extension. So price has been extended, and then we see a deep retracement beyond. If it goes below the 50%, or if you go up to 50% retracement, do not be too excited to apply Fibonacci extension. In that case, you need to be a little bit cautious. All right, let me draw again on my chart. Suppose you were here and the price goes up from A to B, and then you see a deep retracement. A deep retracement is a retracement that is at least 50% or even more. All right. If you pull back up to 50%, do not be too excited, but be cautious. What you need to do to highlight the high of the prior move. So here it is, the high of the prior move. And don't try to enter the trade here, because you see a deep retracement up to 50%. If you buy here, be ready to take profit if the price is approaching the prior high here. But you can bank your profit here and allow the price to break above that prior high, retest, and start going up again. So in that case, use your Fibonacci extension with caution. So you go one step at a time. It's like amber light. You are driving, it's not green light, it's amber light, it's orange light. It's telling you, or it's yellow light, is telling you that, okay, be cautious, all right? Don't go at full speed when you see orange light. So whenever you see a price goes up from A to B and you see a deep retracement, proceed with caution, one step at a time, so you can avoid trading mistakes. Because a deep retracement, it means that, okay, the trend is weakening, all right? So therefore, you go one step at a time with a caution if you apply Fibonacci extension. One more thing, my friend. There is another, so The best time to use Fibonacci extension, I told you, is during the trending phase, all right, or during the multi-wave. There is a one situation also when we can use Fibonacci extension. When the price goes up from A to B, I have my drawing here, goes up from A to B, but the price did not go up too long. So have $20 price move, $10 price move, didn't go up too long. It's not extended like it is here, all right? And then the price pullback. We will prefer that pullback to be like 38.2% Fibonacci retracement level. This is another best time to apply Fibonacci extension. So price goes up first from A to B, didn't go up too far, all right? And now we see a retracement that is like 38.2. Didn't go down too much. We don't want a deep retracement. If you have a deep retracement, as I already explained to you, we proceed with caution. But in this case, price didn't go up too much, but we didn't have also a deep retracement. This is also the best time to use the Fibonacci extension. That's why very often the third area wave is extended, because very often the first wave is not extended, and the second wave very often will be between 38. Sometimes the best second wave will stop at 38.2% Fibonacci retracement level. All right, and then we see a price running very fast. But talking about the best time to use Fibonacci extension, price did not go up very much, and then we have a shallow retracement. We expect the price may go up. Remember, when the market environment is viable and the fundamentals are solid, very often when traders are using Fibonacci extension, they forget about the fundamentals and the market environment, and they say, "Oh, George, this is not working." It's like you're saying that, "Oh, I have the key for the car, I'm now ready, I have my driving license, but the car is not moving because there's no fuel in the car. There's no fuel in the car is not going to go anywhere." So when we are talking about the fuel, we are talking about the fundamentals and the market environment. Sometimes traders may see a beautiful high probability trade setup, but there is no fuel, so to speak, and the price is not going anywhere. All right, you see them? But now I talk about market pattern. All right, I talk about extension. All right, I talk about area wave pattern. But when we are speaking like this, sometimes trader learn things, especially if you are a new trader. This is normal. Trader will learn things bit by bit. Okay, which is okay. So you are starting, you learn things bit by bit. Okay, but as you are growing, having more experience, all the things that you learn bit by bit, you will start combining them. Now I'm speaking to more advanced traders now. So we talk about wave principle, all right, we talk about area wave extension, we talk about market pattern. Those things can help us improve Fibonacci extension, but we can at the same time, combine the wave extension, market patterns, to improve, the Fibonacci extension. It makes sense? One more thing. So I talk about if the price did not go up too long, and then we have a shallow retracement, there is a high chance the price may go up, provided that the fundamentals are solid and the market environment, is a variable. It makes sense? It is also powerful. I also talk about a deep retracement, and we want to proceed with caution. Sometimes the price may not. So in this case, I was telling you price goes up for too long, deep retracement. Sometimes the price will not go up for too long. So it may go up maybe $20 price move, but you may see a deep retracement. In that case, you don't want that deep retracement to go beyond the 61.8% Fibonacci retracement level. So a retracement up to 61.8%, but the price did not go up for too long before, can also produce a nice Fibonacci extension. But the first example that I gave you is better than this one. The first example is what? The price did not go up for too long, but we have a retracement up to 38.2%. It's a better trading setup for a Fibonacci extension trader in comparison to the price did not go up for too long, and now we have a retracement up to 61.8%. But though The price, this is kind of a deep retracement up to 61.8%. Because the price did not go up for too long, we can still have, okay, so there was no extension before the deep retracement to the 61.8%, and then we may expect a price to go up more. If it goes beyond the 61.8% in this particular case, we need to proceed again with a caution. All right, my friend. So this is about a trading mistake and Fibonacci extension. One can quickly, okay, avoid trading mistakes when one is applying the Fibonacci extension by paying attention to the market pattern. Best time to use Fibonacci extension, talking about market pattern, is during the trading phase, rising channel and declining channel, all right, during the motive wave. It is almost impossible for a Fibonacci trader to master Fibonacci extension trading without knowing or mastering the area wave extensions. Now, I have also given you few examples of the best time when we want to use the Fibonacci extension. The best time is when the price did not go out for too long and we have a shallow retracement at 38.2% Fibonacci extension level, or with the price did not go up very much and the price pulled back to 61.8%, we may still have the Fibonacci extension. But the price will not extend if the fundamental are weak or the market environment does not support the trend. It makes sense? If there was an extension before a retracement, we shouldn't be too excited, okay, to apply Fibonacci extension. This is about trading mistakes and Fibonacci extension. If you have any question or suggestion, this is your chance to put in the comment section, and in due course, I will be busy like a mad dog to record another video to answer your specific question. We are the TSTW 24 traders talking about trading mistakes and Fibonacci extension. Happy trading to you all, and speak to you soon.